Investment strategy: the narrow path to net zero. Recent developments signal that the world is moving inexorably towards imposing progressively higher costs on carbon emissions to accelerate the decarbonisation of the global economy. In Singapore, a carbon tax of 5 Singapore dollars per tonne has been in place since 2019. The government is reviewing the level and trajectory of the tax post-2023 and is expected to announce the outcome at next year's budget. China's much-anticipated nationwide emissions trading system, ETS, spanning 2,225 power firms, is scheduled to go live by end June, as part of the country's efforts to reach peak emissions before 2030 and decarbonize its economy by 2060. The European Union is preparing to introduce a carbon tax on certain imports that do not embed carbon costs similar to those produced within the EU, or a carbon border adjustment mechanism. In the US, President Joe Biden has established a task force comprising senior members of his cabinet to update the social cost of carbon that is used by the US federal government to determine environmental regulations and a wide range of other policies that require an assessment of external costs of pollution. At a Green Swan virtual conference hosted by the Bank for International Settlements on 2nd to 4th June, European Central Bank President Christine Lagarde argued that central banks must account for climate change risks even within their current mandates because climate change is expected to increase economic volatility, complicating policymakers' ability to understand and measure inflation. And climate change is likely to induce financial instability and impair monetary policy transmission if not properly managed. Bottom line: our view remains that global efforts to pursue sustainable climate-resilient development paths and mitigate the threat of climate change will drive wide-ranging significant changes to the global economy for years to come. Businesses that anticipate and adapt successfully to these changes stand to benefit from the reshaped economic landscape as policymakers worldwide strengthen their response to the threat of climate change. Various new opportunities are emerging for businesses and investors, including opportunities in decarbonization technologies such as carbon capture and storage, as well as renewable energy. We see even more opportunities emerging as the transition to a low-carbon economy accelerates in the coming years, encompassing all parts of the global economy.